I think what tipped us into the massive correction shortly after we released the last video was not just the announcement of the tariffs, it was how kind of haphazard they seemed. The numbers seemed pretty arbitrary. There was a number of countries that were referenced that have not been problematic with regards to our country's trade. So I think the announcement on April 2nd, the Liberation Day announcement, I think it was seen as more than just double-digit tariffs on some of our trade adversaries, people who are seen as sort of trade negative for the United States. It was really just kind of seen as we're firing shots at every single country that we do business with. And the numbers were larger than anybody expected, and the delivery of the announcment, there was sort of there was a negativity almost around the announcement. It was very much like not just America first, but America only. It was the policies that sort of went along with this announcement seemed very, very protectionist, bordering on isolationist, and I think that really scared the market because it's sort of like reversing 50 years worth of progress that we've made on trade, on global trade, which people have their opinions. I don't consider global trade as a negative. I think maybe there needs to be some guardrails and certain things need to be revisited, but to just undo it was not seen as a positive by anyone. So the market just sort of started falling apart. And you pointed out that it wasn't just stocks, bonds were falling apart, meaning interest rates were going higher and bond prices were going down, which is unusual when there's a stock market correction of that magnitude. Generally, you see some sort of a flight to safety, and U.S. Treasuries are seen as the global bid for safety is what people gravitate towards, and that wasn't happening, at least not in the short term. So, and I think there was currency concerns that were built into that dynamic as well. So, but also one of the things that was fueling higher interest rates was the prospect of inflation that would or will come in the event that these tariffs are implemented. Higher prices means inflation, just generally speaking. And I think that we saw a couple weeks of the market just trying to figure out, where is this really going to land? Part of the announcement was kind of unbelievable. And so I think there were certain market participants, myself included, that were kind of skeptical that this was going to be where things actually ended up. And we have seen some reversals in the last couple of weeks. So the market's calmed down, and there's a couple ways to look at it. You could say that the market has called the bluff of the current administration, or that the current administration has watched the market's reaction and said, hey, we need to dial this back a little bit. We need to work with everybody in order to achieve whatever the desired outcome is. So I think it's the slight softening that has allowed the market to rebound. I'll be honest, the rebound is faster and a larger magnitude than I would have imagined based on what's been actually announced. So it's been a confusing month, to say the least, but it sort of lends itself well to what we discussed last time, which is, you can't predict when we're going to have these enormous up days, and if you're not invested when they happen, you can cost yourself a year's worth of returns. And it really is all just speculation, because I haven't seen any compelling argument that really nails down why did interest rates go up instead of down for a week or two. And I think because that dynamic was so unusual historically, people were jumping to conclusions. And because the headlines were so volatile, and because there was borderline toxicity coming out of the White House, sort of, we don't care about them, we don't care. People were desperate to find a reason for what was happening. And it's probably a little bit of everything. I think, there's a reason that U.S. investors and funds and endowments flock to Treasuries. It's primarily for safety. And foreign governments flock to treasuries for different reasons. They may be required to have a certain amount of US dollar reserves on their balance sheet. They may want to hedge for currency risk in their own currency. So there's a reason why the appetite for US treasuries goes up and down. And again, just to sort of revisit the inflation question, another thing that determines U.S. interest rates is the inflation and growth expectations here in the United States. So all of these things, I think, factored into just a 2-week period where there was a lot going on. And it's, I think, could be dangerous to read too much into it in a very short period of time. I do think it's interesting that the administration came out at the end of March and sort of said, our target is lower interest rates and we're focused specifically on the 10-year Treasury. So to address your question, we did see that when the 10-year started spiking, and I don't mean gradually rising, it spiked by 30 or 40 basis points, which is a lot for the largest and most liquid market in the world. You saw the new Treasury Secretary Bessent start to get maybe a little bit nervous. Not that he appeared nervous, but that was when announcements started flying about potential concessions to tariffs, and we're working on deals. We're actively talking to people. They wanted to settle the Treasury market down, and that is what ultimately settled the stock market down, in my opinion. It's so hard for anybody to have confidence, I think, about what the Fed should do, and look no further than what Jay Powell is saying. He's basically saying we can't do anything. There's too much uncertainty. There's too much uncertainty for the Federal Reserve to make a decision on interest rates. So, and I think what he's saying is we don't know what these policies are actually going to be. Sort of like how we answered the first question. Where are these tariff rates going to end up? And all the rhetoric that's the antagonizing some of our trade partners, Canada and Mexico, and using tariffs to sort of strong arm some of our allies to get results that we potentially want. I think Powell's saying we need to wait for a little bit more. Wait for the turbulence to subside so we can see if this is going to have any impact on inflation or employment. That's really the only things that the Fed has to look at in order to make their decision are unemployment, the direction of unemployment, and the direction of inflation. And what he's saying, and I take him at his word, is we haven't seen movement in either of those inputs that justifies making a move. Freight and cargo is far from my specialty, but we've all seen enough headlines to know that there is something happening. There's a potential problem brewing. U.S. companies that get a lot of their goods, or U.S. factories, or factories that are not necessarily in the U.S. but operated by U.S. companies that use parts and pieces and inputs from China. A lot of those ships have either not left China or they are deliveries being refused because the tariff rate on these items has fluctuated and gone from 20 to 60 to 125 to 145. Now, I think there are deliveries that are not going to happen either at all or certainly not in the time frame that they were expected. There are small businesses that are impacted because they're not able to get whatever it is they need to resell or to use to make their final product. And there is a wave of issues that's around the corner. The question is, how big is it going to be? How much of that is already priced in? Because a lot of this data is available. So there are people who are kind of raising the red flag on this issue. And it's not that it's being ignored, I don't think, but it's possible that in some way it's being priced in, and maybe there's enough inventory already on the shelves here in the United States, or maybe it's assumed that the deliveries will end up happening and prices will go up, but it will only be a one-time deal. Again, I'm not able to add a whole lot of value here other than this is an issue. It's been highlighted by people who understand this better than I do, and it's something that we definitely are watching, and I think the hope is that it's not going to be a long-term issue, and that all of this falls into the category of leverage in order to expedite an agreement between the US and China. There isn't any data to suggest that we are in a recession now, although the GDP is that data is softening for sure. Consumers somehow still seem strong. Interest rates have stabilized and come down a little bit, so there's maybe some optimism about the housing market unfreezing a little bit, the refi market. We're not quite at levels that people would start refinancing or taking out home equity lines to do projects. It's a really hard question, and the best part I think of your question is, does it matter? Are we in a recession, and does it matter? The market has already priced in at the very least a growth scare, if not a recession. I remember just 3 years ago, 2022, it was kind of the same thing. The stocks and bonds both sold off in the first half of the year. We did get 2 negative GDP readings quarter over quarter. Q1 and Q2 were both negative in 2022, which some people define as a recession. And yet, the market had already started to recover before we started even seeing the headlines about it. So, like you said, it's a lagging indicator. Can you invest through a recession? Yeah, for sure. And things just move faster now. Everything moves faster. You get headlines, and then there's a response to the headline by either the Federal Reserve or the White House within 24 hours, and the market just absorbs these pieces of information so fast that it's possible that just the cycle of these things has shortened. There are some times when it's easy to answer the what could go right question, and then there's sometimes where it's difficult. This is one of the times where it's difficult, partly because the market has already recovered so much of what it lost without very much changing, other than tone. I think the tone in the last couple weeks has changed noticeably. One of the things that we've noticed is that the messaging seems to be coming more consistently from Besant, who is seen as calm, not necessarily a friend of Wall Street, but a veteran of Wall Street. He understands how markets work and how markets are likely going to respond to certain headlines. So the fact that he is out there in front of cameras more than Lutnick and Navarro, who I think are seen as just very market negative, hawkish China, hawkish everybody except the United States, which I just tend to disagree. I just don't think the world works that way. But I think there's a messaging that's coming out of the administration in the last 2 weeks that's different, which is we actually do care. We care a lot. So that's something that's already been going right the last couple. It's allowed the market to settle down. From here, what could go right? Obviously, there could be significant trade deals announced. Now, I don't personally know what specifics would be addressed in a trade deal with, say, China that would be so bullish for the United States going forward. I mean, we're still below, if not significantly below, levels where we traded at a month ago. Now, not everybody looks at the stock market as the barometer for how well we're doing. I suppose maybe the Chinese government or a handful of large Chinese companies could announce that they're making huge investments in factories in the United States. And it's going to be positive for our relationship with them going forward, and it's going to bring a lot of jobs to the United States. That would probably go a long way. I think the Chinese government committing to buy a ridiculous amount of U.S. Treasuries for a period of time. If the Chinese government said we're committing to buying $1 trillion of U.S. Treasuries every year for the next decade, that would be huge. That would be just such a positive signal. It would put downward pressure on our interest rates. It would send a signal that these two countries are actually looking to do business together for a long period of time. That would be good. That's something that I think could go right. And could it happen? I don't really know. So just continued positive movement on the trade talks and the headlines, just continuing to soften. I don't know how much upside there really is in stocks from here until we film another video, because we're already we've recouped a lot of what we've lost, which is surprising.